Hey everyone, in this video I wanted to discuss how Plug Power plans on raising money in 2023. Of course, Plug Power is an innovative growth company that spends a lot of money on research and development and a lot of money building plants to expand renewable energy production. So this company has been losing a lot of money on the bottom line. So as an investor, you might be thinking, well, how does it keep getting money if it keeps losing money on the bottom line? So one of the ways Plug Power gets money is by selling more stock, selling more shares of the company. But what that does is that dilutes existing shareholders. What do I mean by dilutes existing shareholders? Well, if you've got a company that has 1,000 shares outstanding, meaning 1,000 slices of the pie, that's one way we can think about it. And you've got an earnings of $1,000 split between 1,000 shares. One share will get $1 in earnings, right? So 1,000 shares, 1,000 earnings, $1 per share, right? That's a nice way to think about it. But if that 1,000 shares now balloons up to 10,000, those existing shareholders now need to split the 1,000 in earnings among 9,000 more shares. So those earnings get split between more shares. That's what I mean by diluting shareholders, right? The existing shareholders now have to split their profits with more shares. The only way that makes sense for the existing shareholders is if the money the company raises from selling those additional shares goes to produce more earnings, and therefore the share of the pie is greater, right? So you go from just 1,000 in earnings maybe to now $10,000 in earnings, or even better would be 100,000 in earnings. So you've sold more shares to raise more cash, and then you use that cash hopefully to generate more profits, which then is split among more people. So it's okay if you have more shares if it also helps to increase the profits, which then will be split among more shares. So that's the plan here for Plug Power, is that it's been issuing more shares, but the goal is that they're investing in expanding production, which is lowering the costs of production per unit, which then is hopefully going to produce more profits in the long run. So what I have here is a chart of Plug Power's average diluted shares outstanding, and you can see just how much they've increased the number of shares. Back in 2014, they had less than, let's say, 100 million shares outstanding. That went closer to 200 million around 2015, which went above that, and since 2020 it's really expanded, and now they have 584 million shares outstanding. So they've went from 100 million to 584 million in shares outstanding. So more than 5 times the number of shares outstanding over the last decade. And the company needs to raise more money. So, rightly, shareholders are concerned how Plug Power aims to raise that capital. Are they going to dilute shareholders even more going forward? So, thankfully, this analyst from Wall Street is asking, Bill Peterson is asking Plug Power, how do you plan to raise more money? You talked about raising additional financing. You talked about the DOE and mentioned more in the second half of the year. Is there a preferred means of raising more money? And the CEO says, well, I'm going to leave it to my CFO to answer, but I will say that there is some interest in people investing in the plants themselves. So instead of investing in the company, there are some investors that will specifically invest in the plants themselves. So a more micro focused investment. But then the CFO, Paul Middleton, comes in to give a more detailed answer, saying, first and foremost, we're looking at non dilutive capital, right? We're not trying to dilute shareholders even more. Secondly, we're looking at what the cost of the capital is, right? We don't want to pay a very high cost of capital. And third, we're looking at flexible capital. Flexible capital is also important for Plug Power because they're not profitable on the bottom line. So they don't want to get into agreements that says, hey, you have to pay us back this much money at this specific point in time, because that would put Plug Power in a bind because they're not profitable on the bottom line. So how would they come up with that money if they need to come up with money at a certain date in time? So they need to be flexible. But again, like Andy said, there's a lot of parties that are interested. The ambition we have to grow and invest in scale, it'll probably be a combination of solutions as we move forward. It puts us in a great position of optionality, and that's when Andy said we're working toward in the second half of this year. You're going to hear more, and you're going to see more through in the months to come. So I hope that provides some perspective on how Plug Power aims to raise capital for the rest of this year. It's good news that they're looking at options that are not going to keep diluting shareholders, because they've done so much shareholder dilution over the last several years. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.